as far as the benchmarks are concerned. But well, we've been in the midst of a slew of earnings that have been coming out, and today it's been the focus on the FMCG pack. Remember, the next couple of days also, you'll be having a couple of the large caps that will be reporting numbers. Dabur's been one of the counters that's actually reported earnings today, is what we've seen along with GCP. I'll just pull up the stock of Dabur for you. In fact, we're just going to start talking to the management as well. The stock actually is seeing a little bit of a recovery. It's now up by nearly 2 to 0.3% is what we're seeing. And it's posted a healthy set of numbers in line with street estimates as well, is what we've seen here this quarter. In fact, let's go across to the management. Sunil Lugal, CEO at Dabur India, is also joining us this afternoon. So thank you so much for taking the time out to talk to us. You know, we've seen actually a good set of numbers. Will you be able to continue this kind of performance for the full year as well, just to get a perspective in terms of the road ahead from here?
It's very hard to say at this point in time. It's early days as we speak. The demand side continues to be a cause of concern. Domestic demand is still pretty slack, so there seems to be no uptick on that front. Hopefully the second half will be better, but the current quarter looks fairly subdued. Overseas also there are good things and not so good things happening. The good part is many of our businesses in part of the Gulf areas, the North American business, the European businesses are doing extremely well. But there are headwinds in terms of political and economic instability in parts of the Middle Eastern area, Yemen, for example, Libya, Iraq. So a lot of positives and negatives coming together, so it's very hard to predict how the business will perform. But one thing is for sure, that the demand side will continue to cause some concern, but the margin picture looks still fairly benign.
We did see unseasonal monsoons, and a patchy progress. How do you view a rural growth going ahead now, Mr. Dugal?
I think the monsoon will be reasonably satisfactory, so I don't think the monsoon outcome will have a hugely material impact on demand. On to your earlier question, there were unseasonal rains in the months of March and April, which led to a sharp drop in demand for many of our summer products like glucose and Pudin Hara, etc. So the health supplement performance this quarter was weak, unlike most of the portfolio. Now, I think the monsoon issues are reasonably now visible, and doesn't look to be a bad monsoon. Not a great one either, but not a bad one too. So that should not impact demand very much this way or the other. I think the underlying issues are liquidity, interest rates, the overall confidence levels of the consumers, and that will have perhaps a more material impact in terms of demand than the monsoons.
Sir, also you derived quite a bit of a benefit of lower raw material prices. Will this continue for the next 2 to 3 quarters, just to understand as to how input prices are likely to play out?
It will continue, but it will tend to narrow because deflation had begun in the second quarter of last year, and it was at its peak in the first quarter. So therefore, while deflationary pressures continue to happen, the relative deflation compared to last year on a YOY basis will reduce in the quarters going forward. It will still be quite a bit in the second quarter, but taper off towards the third and the fourth.
All right. Segmentally as well, what do you think will drive growth for FY16?
I think toothpaste continues to perform well, so we grew around 17% in toothpastes, in oral care as a whole. So that's a very good performance. Hair care overall seems to be doing well. Both hair oils and shampoos are doing fine. I think the key thing is our food business, which is driven by beverages, and how that performs. It's been so far doing extremely well, but we cannot take its continued growth for granted. And a lot will depend upon the winter season in terms of the performance of health supplements, the Ayurvedic products like Chyawanprash. That will have a hugely material impact on our performance in the second half. So we do hope that things will be better in the second half as compared to the first. Not that the first quarter performance has been bad, but still the pressures in terms of the demand side have been quite severe.
So what's the on-ground scenario as far as competition is concerned, and outlook on advertising costs as well?
I think companies are throwing more than money at the trade, and there's a lot of trade promotions happening, consumer promotions. Not so much activity on the media front. So I think some of the gross margins which have been generated are being passed on to the trade. So otherwise, there's no huge issues in terms of pricing. There's no price decrease happening, at least in the categories in which we operate. But there's definitely more trade lubrication and support being given by the companies.
All right. Thanks for joining us on the latest there.